Hey, good morning, everyone. Clint Thomas with RKN, your CPAs. It is Friday, March 1st. Can you believe it? Hey, did you know that if you're a small business owner, there's actually still one deduction you can take and actually pay it today and actually claim it back on your 2018 tax return, and that is your retirement plan contribution. You actually have all the way out until your extended due date of your tax return this year, which could be all the way out till September 15th if we were to extend you, and actually take that deduction on your 2018 return that we're filing for last year. So it's a really good deal for small business owners. And real quickly, the top three that we see are typically either the simple IRA, the SEP IRA, or the solo 401k. And there's so many different options, pros and cons to each one of these. But real quickly, if you want easy, it's probably the SEP IRA is probably the easiest. You can actually establish the account anytime this year up until your extended due date and still make the 2018 contribution and claim it on your 2018 return. There's simplicity there. There's the inability to actually loan against the account, whereas you could, if you had a solo 401k, take loans against the plan. But on a solo 401k, you actually have the ability through the elective deferral plus the employer match to contribute more money into your retirement account than you could on a SEP IRA or simple. And last year the limits for a solo 401k were $18,500 on the employee elective side, and then you could, on top of that, still contribute an employer match all the way up to the overall limitation of $55,000 per year into that account, plus a match if you were at least age 50 by year end of another $6,000. So we're talking solo 401k for 2018. Theoretically, you could put in as much as $61,000 into your small business retirement plan, which is great. SEP IRA, you have a little bit of limitation because you don't have any kind of employee deferral, so you're limited there if you're self-employed to a 20% contribution of your self-employment income, again up to the maximum of $55,000 plus any catch-up. Simple IRA, which is what we have in our firm, a little more limited, lower deferral limits. You could do $12,500 per year on the employee side with a catch-up of 3. You can also, on the simple IRA, have either mandatory or elective employer contributions of either 2% or 3%, with some options there on lowering that over a certain period of 5 years if you need to. You can also determine eligibility based on income, whereas other plans have other requirements based on age and tenure. So there's so many ins and outs of these things that you really got to sit down with your CPA and figure out which makes the most sense based on your fact pattern. If you're a high income taxpayer and you want to pop the most money you can, I would say solo 401k is a great option. You also, on a solo 401k or on a SEP IRA, if you wanted to go that route, you don't have any employer requirements. Employer matching contributions are all completely discretionary. So there's things to think about. If you pay yourself a wage, there's 25% of your wages that we can put into your retirement plan. Or if you're just like a Schedule C and you want to set up a SEP IRA, you're talking 20% of your self-employment income, your net self-employment income. Could be your contribution up to the limits. For 2019, the limits are raised just a little bit. It's $56,000 plus any catch-up of 6. So overall, if you're over 50 or at least age 50 by year end, you could, from 2019, you could do up to $62,000 max. So again, there's things to think about there, but it is a great option for those who are self-employed who want to still lower their 2018 tax liability and make a contribution this year in 2019. So just keep that in mind. We here at RKN, our mission, our goal is to guide you forward in every way. We're here as your trusted advisors. If you have any questions about these types of retirement plans, how they apply to you, or any other things that you see here in this month's newsletter, please give us a call, and hope you have a great day.